We're now moving to a session which we've entitled The Changing Role of Asia Within the West-East Corridor. Now, I think most of you accept that the kind of epicenter of the globe from an economic perspective has certainly shifted east. We get that. Everybody gets the fact that Asia has a very prominent role to play. Done. What we're here to discuss is how that role of Asia is changing. Is China slowing down? Is India booming? What's going on? And how does that affect the West-East Corridor? What we have on stage is we have a three-person panel here. The moderator is Vikram Mansharamani. He's a lecturer at Yale and a senior fellow at Harvard. We also have Alex Thursby, who's Group Chief Executive at MBAD, and Mark Schwartz, who is Vice Chairman Goldman Sachs International and also Chairman of their Asia Pacific business. Gents, over to you.
Thank you, Siobhan. First of all, it's a pleasure to be here. Thank you to the folks at the National Bank of Abu Dhabi for having me. I'm thrilled to participate in this session. So let me just dive in, because I know we have a time constraint and we're running a little bit late. So, Mark, Europe is having issues. Currency markets are volatile. We have a strong dollar creating a ripple effect through commodity markets, as well as dynamically affecting the competitiveness of nations. We have a young Africa contrasted with an old Japan. And of course, China is in the midst of a massive economic transformation from an investment-led story into a consumption-led story, or at least that's the hope. And that transition is not without risk, as seen by some of the concerns over China's fragility, particularly in its financial sector. You have a spectacularly interesting seat sitting in Beijing as the head of Goldman Sachs in Asia. What does the world look like from your seat?
Well, Vikram, firstly, thanks very much for including us. We really appreciate that. So I've been living in Beijing the last 3 years, but I've been visiting China for the last 35 years. I've seen 3.5 decades of really extraordinary growth. And it's been fun and interesting to live there these last few years. From my perspective, from our perspective at Goldman Sachs, it's all about Asia in these next decades. And why do I say that? Well, for a couple of reasons. Firstly, we think of Asia as, in very simple terms, as China, India, and Southeast Asia. And I obviously realize, and we include Japan and Australia, New Zealand in the business as well, but for this purpose, just these three segments. So in China, China is 1.4 billion people in population, a $12 trillion economy. And India is a $2 trillion economy with 1.3 billion people. India is going to grow about, 6.5% or 7% this year. China is going to grow about 7.1% this year. And the rest of the ASEAN, if you look at the ASEAN, the 8 or 9 countries as a block, those countries are going to contribute, well, those countries are going to grow at about 5 or 5.1%. Those countries include about 600 or 620 million people and represent an economy of about $2.4 trillion in size. So if you look at Asia in that manner, that's about half of the world's population. All of the growth, the 7% growth in India, the 7% growth in China, the 5% growth in the ASEAN, that growth, plus the US, represents almost all of the global growth this year. So how do we look at Asia? We look at it as the place to be, the most fascinating, the most interesting place, and a place that deserves everyone's attention and deserves a lot of investment, because this represents the great growth opportunity. I'll say quickly, we're bullish on the US. We're concerned about sluggish growth in Europe. We believe the US is going to grow 3 to 3.5%. We believe Europe's going to grow a little bit more than 1%. We're concerned as well with sluggish growth in Japan, which will grow perhaps 1 to 1.5%. Again, all of the growth globally is coming out of the ASEAN, out of India, out of China.
Sure. So Alex, let's turn to you for a second here. Given this strong view of Asia, Is it fair to interpret Asia as the engine pulling this West-East corridor thesis of yours? Is this the real driving force that is going to bring with it the rest of the West African areas and the African continent towards the growth rates that Asia is experiencing?
I think it's very fair to say that. In my view, we live in a quite unique period where Asia is 400 years ago was the biggest contributor to global GDP, and today it's becoming so. And what Asia needs, Africa and the Middle East has in abundancy: energy, and from the Middle East, the hydrocarbon space, the food basket potential to help further food stuffs moving into that part of the world, minerals. So these initial focuses of exports will only help the region of the Middle East and will only help the region of Africa. When you also look at Asia, I think it's fair to say that there was a little bit of laxness after 2008 in quantitative easing. But what I reflect on is that it took 2 or 3 years before policymakers then churned back and said, what is it that we have to do to continue the economic miracle of Asia? And I think you've seen that more recently in India with a huge deregulation and movement by the government. And you're seeing it massively in China. I mean, what is happening in China today is possibly as reform-orientated as Deng Xiaoping was in the 70s. So I am very confident that Asia will continue to be this huge engine that the Middle East businesses, Middle East exporters can take advantage of, and that Africa will tie onto that tail. It will take some time, but it's generally led in trade, and then it's followed by investment. And what we're seeing at the moment is that the trade growth between these three continents is now running in excess of 14%, 15% growth, and we were expecting 12%. So despite a so-called slowing Asia, the trade corridor has never been as strong, and we expect that to continue.
So let me take that last point of yours, Alex, where you said trade will precede the investment logic. It's my understanding that China in particular has been very active investing in various parts of the world, including Africa, including the Middle East, and including parts of India. And there's lots of cross-border investing activity alive and well today. The historical perspective many of us have had, which has been Asia has been a source of capital. I want to ask the question of both of you, is Asia now a destination for capital? Are we seeing the arrow have two points to it, going in both directions?
We are, and we will see a lot more of it. But both of your points about trade preceding investment is exactly the right comment. Just to take two countries to make the point most simply, between China and the U.S. Annual trade between China and the U.S. in 2014, I think was about $560 billion. But the investment going both ways was very modest. China invested about $12 billion in the U.S. in 2014, and the U.S. invested $5 or $6 billion in China. So the investment between the two countries, the FDI, the foreign direct investment, has been very, very modest, even between the two biggest economies in the world, the U.S. and China. So the trade is very significant, but the investment follows.
Any difference of perspective?
I would agree with that. Absolutely. I think what we are starting to see is the Middle East, which initially was looking at investment within its own region, has over the last 5 years gradually started to look further afield. And I think the UAE has been at the forefront of that. And we've started to see entrepreneurs looking at investment into the retail space, into the power space, into Africa and North Africa. But it's also interesting, I think, that everyone in this region watches Asia. And I think as we become more educated and able to understand how to manage the risks of Asia, that there will be a flow, a continuous flow, beyond just the sovereigns, which have started to operate in that manner, but more into the commercial business sense as we move.
I'd like to make one or two additional comments if I can.
Please.
Firstly, a comment on outward investment from China to the rest of the world, particularly as it relates to infrastructure. So you might have seen in the last 12 months, China making very bold, significant announcements about infrastructure. China's got 4 ways to invest meaningfully in the rest of the world in infrastructure. It's got its own China Development Bank, which many people don't realize is bigger than the World Bank at this point in terms of its investment portfolio. China also has the new BRICS Bank domiciled in Shanghai. Thirdly, China's got the Asia Infrastructure Bank. And fourthly, China has also announced a Silk Road Infrastructure Fund. China, in those 4 different development efforts, all of it dedicated to infrastructure, China's announced to all of us it's going to invest hundreds of billions of dollars of capital in infrastructure, not just in China, principally outside of China, connecting to the ASEAN, connecting to the Middle East, connecting to North and South America. So that's very, very significant, I would say.
Sure. So I want to turn the conversation a little bit towards the risks, specifically in Asia, and how the risks of Asia may ripple through this West-East corridor. So let's start with China, since we've got that as we've established China is the driver of the West-East corridor thesis. Now let's evaluate the health of that driver. So China is slowing. Let's not debate it. It's been evident in the data, but it's still growing. Talk to us about the risks that you see, Mark, in terms of China's slowdown, what that may mean for other countries. Australia has been a wonderful supplier that's ridden the Chinese investment boom. Europe is one of China's largest trading partners. These are areas of the world where weakness may come in to affect the Asian story. So talk to us a little bit about that, and then I've got a conversation twist that I want to move to Alex to ask him about weakness there.
Well, listen, there's obviously a lot of risk, and it ties to your previous questions. Why isn't there more investment in countries like India and China? Well, one simple answer is that investors around the world, other countries and other companies believe there has been a lot of risk. And it encompasses a lot of different issues. But I'd say in both of those countries in particular, there's a new leadership in each country. In India, Prime Minister Modi. In China, obviously, Xi Jinping and Li Keqiang. And in China in particular, in the third plenary session from late 2013, where a broad set of 300 to 400 reforms were expressed and discussed, and that has now become a blueprint for reform. Listen, one of the very biggest risks is making investment in China an informed, predictable set of decisions for investors. And so China's got to reform economically, it's got to reform its markets, its capital markets are very, very underdeveloped. And there are a whole set of broad social and cultural reforms that China's got to embrace. The issues and challenges are very daunting. Just the environmental issues alone, after 35 years of double-digit growth in China, which lifted 600 million people out of poverty and is generally an extraordinary economic success. Well, with all of that very significant growth and development, there were lots of externalities created. And the result in Beijing and across China, frankly, the result across much of Asia is serious air pollution, very serious water degradation, food safety issues. Those are all the primary issues facing China. So the issues are daunting.
Let me ask the question very directly. Is there a risk of financial implosion within China?
We don't see it. At Goldman Sachs, we're optimistic. We're bullish on China. We really are. We're not saying that to be politically correct. We're saying it because we have significant resources on the ground. We've been in China longer than any other foreign financial institution. We've been in China for the last 20 years. We have meaningful relationships with the government, with the state-owned enterprises, and with many of the privately owned enterprises. Goldman Sachs was the firm that's taken so many of the new economies, so many of the very interesting technology businesses in China public, including Alibaba, Tencent, Baidu. We've represented all of these very, very important emerging growth companies.
So, by the way, little side note, in case those of you don't know this, I believe it was Mark who originally found Jack Ma when he was a teacher. And so after this conversation, I have a wife who's in the education space, and I'm going to see if Mark can make her a billionaire, just for my benefit. So we're going to work on that next.
I'll try to make that introduction for you, Vikram. But yes, we've known Alibaba since before Alibaba was created. So, but I want to express the other more cautious point of view. I'm always struck when I travel through Europe, and most especially back to the US, there's a more negative view. There's a more bearish view about China. It's interesting to me. On the ground in Beijing, the leadership, Xi Jinping and Li Keqiang, and the entire Standing Committee and State Council express so much confidence. Not arrogance, not hubris, but quiet confidence that they are thoughtful, strategic, smart, long-term oriented investors and are willing to realize that 35 years of double-digit growth left the country very vulnerable and very weak in many respects. And that's the reason for reform. That's the reason for pivoting. Goldman Sachs gives that government, gives that leadership a lot of credit for addressing the issues now. Are they late in addressing the issues? Possibly. It doesn't matter. They're addressing the issues with a very significant, very deep and sincere commitment to reform. We're bullish, but there is a negative, bearish view out there about China. We don't believe in the hard landing. What about you, Alex?
I think it's very interesting what you said about the rest of the world or some parts of the world. You get a feeling in some quarters there's a wish emotionally for China to fail, and I think that's very, very unlikely. And if you look at the financial system over the years, yes, there has been forced lending, if you wish to call it. Yes, the banking system on occasions has been used as a stimulant to keep the growth engine going. Yes, there is the banks and the local governments in various provinces of China have sometimes had a priority around supporting state-owned enterprise. But I fundamentally think that the Chinese banking system is shifted. It is not out of the woods by any means, but it is strong. Its liquidity is strong. People trust it. People trust that the intervention of government when it's been distressed before will come in and support it. And the savings ratios of that country just allows you to have confidence that liquidity will always be there during times of crisis. There is reform going on, and both the PBOC and also the regulator, I think, has moved dramatically over the last 10, 15 years. The wish to open up their equity markets with Hong Kong, from Shanghai to Hong Kong, Shenzhen to Hong Kong, is an enormous step. You get out of date when you haven't been in Asia for 4 or 5 years, or 2 or 3 years, should I say, maybe even 2 weeks. I was explaining to Mark. But I think the fundamentals are there. I think for businesses going into China, you have to be very careful that you understand the market, you understand that it's a huge market, and maybe you should play in what I would call narrow clusters. And the markets are very different from the regions. Shanghai is very different to Guangzhou in terms of that. And I think to be too bullish is actually at your peril. to understand the risks that are associated, even from things like foreign exchange remittances. You've got to keep on your edge of your seat all of the time. And one should not underestimate, and I think Mark probably is much better positioned than me to comment, but Chinese enterprise is changing. State-owned enterprises got better, but now you see a party that is very comfortable in having private enterprise lead its economy. And I think that's a very significant shift over the last 8 or so years, and I think it's really come into play with its current regime, that private enterprise is, positive. And to see someone like Alibaba list in the United States is quite remarkable. I don't think you would have had any chance of that happening 10, 15 years ago. And that's just, to me, an indicator of the comfort that private enterprise will become more and more sophisticated and will become more and more competitive. So entering that market is hard work. And the Chinese enterprises are becoming better and better every day.
The one headline risk that Westerners especially, and that China bears focus on, the one headline risk is $28 trillion of debt. $28 trillion of public and private debt as of the end of 2014 in a $12 trillion economy, growing at 7%. So we could debate the rest of today whether that kind of leverage at that kind of macro level is too much. And many excellent economists would argue historically that kind of leverage, 250 to 280% of GDP, is too much debt. But I would argue, and we would argue, that there's so much further growth and development ahead in urbanization and other reforms. There is so much rebalancing of that debt in equity reform and the vast improvement ahead in the securitization market and the corporate debt market that China will be able to manage that issue of too much leverage.
And we shouldn't forget that China is still a huge purchaser of US dollar debt. Yep. So it's not that it doesn't have reserves. Sure. And if you view that the US Treasury is still a viable instrument, which I think we all do, then you can net it off if you so wish in some regards to get to a proper debt level. Sure. But I agree absolutely with Mark. Yep. Just the progression of the economy, 6-7% growth on what the size of the economy is today is substantive.
Yep. Sure. So, Alex, I want to get your view on risks emanating from the Middle East. We've gotten sort of the Asian perspective. Look, we have oil prices low. Let's just say that. Given where they are, this has probably a negative impact on the region's strength here, but is a wonderfully positive stimulus for Asia and the customers of oil, in particular, China and India. How does that offset your thesis, if at all, for this West-East corridor? And in particular, focus on the oil angle and what that means. And of course, that's related to the dollar and other things. So,
look, I think it's fair to say that our expectation at NBAD, certainly in the formation of building our businesses, is that we expect oil to run about where it is today, plus or minus 20%. And that's our sort of 3-year outlook. So no catastrophe by any means. I think we have to be very careful. The 3 things. First of all, the Gulf in itself has the capacity to hold out for a long, long time at this type of oil price, and has the capacity still to grow. Yes, governments may become more effective about how they use their dollar, but to get the stuff out of the ground, we are still the cheapest in the world. And that's a very strong base for which to have. The second is that if you expect that oil importing nations benefit greatly from this, then demand is going to be substantively strong, and that we sitting in the middle, in the Gulf sitting in the middle, have a role to play as the movement of goods and investments between the zones. So we view that what is good for Asia, what is good for Africa, what is good for other Middle East countries is actually good for us in the formation of our diversity. And we must remember, we all are very aware that the UAE is 73% now non-oil. Yeah. And that's been incredible. And one would say that the Dubai piece actually wins greatly from a decreasing oil price because it's reliant on other factors. The third thing is that I think that I'm actually a long-term bull on the Middle East. And the reason why I'm a long-term bull on the Middle East is an observation of what happened in Asia during the 60s and 70s. There was huge violence, there was huge corrupted governments, there was huge daring with the left, if you wish to call it that, the confrontacy, the problems in Malaysia, etc., the problems in the Mekong Delta, and obviously what China was in those days. And, you know, it's not that long ago where there was a massive, let's say there were a lot of people who were not being educated, there were a lot of people who were dying through various violence. And that leaders came through, they understood the economic development question is the solution to people's quality of life, and that started the phenomena that we now talk about as being not only in China, but I think, as Mark said, Southeast Asia and India. And when you look at our part of the world, if China has some negativeness from outside, we tend to get tarred with the same brush. And I think there is going to be changes. And I think Egypt is probably at the key of this change. The ability for Egypt to develop as an economy, which will be domestic and export-led, to build the infrastructures, to bring the policy changes that you're beginning to start to see, and to give people a better quality of life, will be enormous impact upon the region. It will be very similar to the changes that Indonesia had, the changes that China had in their respective theaters of Northeast Asia and Southeast Asia.
So are you an Egypt bull today?
I am actually, because I believe, I wouldn't say today, I think that all these paths create rocky roads, sure. And you have 2 steps forward, 1 step back. But I believe you have, you know, if Indonesia, which was only 30% literate in 1962, can be what it is today, why can't Egypt? Which is far ahead of where Indonesia in relative stage. So, and I think what people saw there was leadership, sometimes tough, but it understood fundamentally that private enterprise and the economic growth was the key to making people's life better and to bring political stability. And I think we live in a very interesting time. Potentially, we're right at the beginning of this wave of change. Now, some would say no chance. I look at it a little bit differently. I'm a little bit more positive, but it will be a hard road. And the effect of Egypt on the rest of the Middle East can only be positive. Yeah. And it's a little bit like saying the effect of the changes that were made in certain states of India in the early 90s, in the way that they delivered, how that rubbed off onto other states of India and how they changed their economic policies and how they progressed. And you're even seeing Bengal now and Calcutta, or Kolkata as we now know it, the commercial enterprise is
Sure.
coming.
Sure. Anything to add to that, Mark?
Well, I'd come back to Asia and pivot off of Alex's comment and focus on leadership. The reason we're so bullish on Asia, if you look broadly around the region, there are important change agents in Japan with Prime Minister Abe, in Indonesia with President Widodo, obviously in China with Xi Jinping and Li Keqiang as the president and premier, and most recently in India with Prime Minister Modi's election. In every one of those countries, there is a chance for bold, almost audacious opportunities for change and reform. And with that, we're hopeful and we're optimistic.
Sure. So last question, since I know we're running out of time. You've both emphasized the shift away from state-run growth towards private enterprise. We've talked about China, we've talked about India effectively turning from a socialist-leaning, policy-oriented country towards one more capitalist-oriented, unleashing the powers and forces thereof. What about Africa and the prospects you see within that worldview for real economic growth that can help Asia? It's part of the corridor.
Yeah, I think there are two parts of Africa that really look quite exciting. Again, like most emerging markets, they have their moments. But I do see the entrepreneurialism and the mercantile spirit in West Africa, not just Nigeria. I think Ghana is also a very good example. And people wishing to start businesses, progress, connect, all of the things that are important. So it's maybe not going to be a leading technology play, but it's going to start in trading, it's going to start in light manufacturing, etc. And that has already started. Okay. I also believe in the longer run, although not as consequential to the continent of Africa, East Africa, the Kenya, Tanzania, Uganda triumph that will be there. And there is definitively a mercantile culture that survives in tough times, and if times get better, will distinctly prosper. So you see the ingredients, again, similar to Asia. You had the overseas Chinese, which I guess today now is about 60 million, if you include part of Taiwan and that number. Those mercantile spirits will help. And I think what you've seen is in Africa is a change very much from the leftist side over the last 15 years to politicians understanding that businesses are required. And I think of all countries in the world, South Korea showed that in its economic development between the 1970s and up to where it is today. It was done with private enterprises. And I think governments that in Africa are beginning to realize they don't have to intervene. They have to give an environment and then let it go.
Sure. And I would say in closing, the big macro change across Asia, which will play out in Africa on a slightly lagged basis, the big macro change, as trite as it sounds, is the big penetration of the internet, the big penetration of smartphones, the huge connectivity, all the social media platforms that have been created across Japan, Korea, Greater China, now Southeast Asia, and just beginning in India. The big penetration in India of the internet and smartphones in particular, where every one of us is carrying around a supercomputer in our pocket. That's happened broadly across Asia in the last 10 years. It's just emerging in India right now. It's lifting hundreds of millions of people and a vast middle class that will begin consuming goods around the world. That's going to happen in Africa. To me, the next decades, and probably this century, is a century of Asia and Africa quickly to follow.
Perfect. On that note, let me thank both Alex and Mark for taking the time to join us this morning. Thank you.
Thanks.
Thank you, Mark.
Thanks.